Hi, this is Bill Mervin, branch manager with AnnieMac Mortgage here in our Newtown, Pennsylvania office. Today, we're going to be discussing the difference between a pre-qualification and a pre-approval. But before we begin, I want to draw your attention to a link on our blog. Just click on that link, and myself and someone on our team will contact you if you have any questions or have any ideas for any future blog topics. These are terms that are pretty much used synonymously by people who aren't in the mortgage business, but there's definitely a difference between the two. A pre-qualification, some banks, I like to think our bank and our team, do a very, very good job in a pre-qualification. We don't want customers, borrowers who think they can get approved and who can't get approved, and their hopes get up and they get excited and then find out they can't buy a home. And also, we work with a lot of realtor partners and other referral partners. We also don't want them wasting their time showing homes to a borrower and then not being able to get a loan. So even when we just give a pre-qualification, we tend to try to do a good inspection, a thorough inspection of all the relevant documents. So that means that we look at the tax returns, we look at the W-2s, we look at the pay stubs. We do a full analysis of the items which are typically required to get qualified. But at the end of the day, it just means that the loan officer or the originator, the person who is the salesperson, for lack of a better term, has reviewed it and believes the loan to be within the program guidelines. A pre-approval is one step further. It's much more stringent. It means, and not all banks offer it, I should say, it's another very important part. Our bank offers what we call a TBD pre-approval, and that means to be determined. It means you want to buy a house, but you don't have that house picked out yet. But we actually can submit your credit, your income, and your assets and have it actually looked at by an underwriter. The underwriter is the person that ultimately reviews these documents and signs off on the work that the loan originator has done to make sure, give it an official sign-off. That will hold a lot more weight when you're making an offer. And it'll also take a load off your mind as the borrower or as the referral partner, knowing that the loan has been properly vetted up front. So a pre-qualification can be done very thoroughly, but doesn't have to be. And so again, it doesn't hold as much water. Pre-approval means that those actual relevant documents have been reviewed and signed off by the ultimate decision maker, the bank's underwriter, and we have a letter that's got a lot more weight behind it that will strengthen your negotiating position when making an offer because it's, again, more solid. And it'll also allow the process to go much quicker and with much less anxiety because you know up front that you're not going to hit any roadblocks. So thanks for watching our video blog. Hope you found this information helpful. If you have any questions about this topic or any mortgage-related topic whatsoever, please reach out to us at the phone number listed below, and we'll be happy to answer any questions you have. Have a terrific day. We'll see you next time.